Good morning all. It's great to see so many of you joining us already. We'll start in just a few moments time once everyone has had a chance to get in and get settled before kick-off at 9:30. It's great to see you. Good morning again. I can see there are still large numbers of you joining us, so we're just going to hold off another few moments just to let everyone have the chance to get in and get settled before today's session. Thank you. Okay, good morning and a very warm welcome to you all this morning. My name is Caroline Preston. I'm Business Development Manager in PKF-FPM and I will be your host this morning on this, our second instalment of part one in InterTrade Ireland's COVID-19 webinar series. Again, like yesterday, we have another great lineup for you and a great turnout with a couple of hundred joining us this morning. Today, we're going to be looking at the topic of financial supports for businesses in Ireland. But before I hand over to Shane O'Hanlon from InterTrade Ireland to formally open the event and introduce our speakers and panelists, a few points on Zoom for those of you who are attending their first webinar. There will be an opportunity later for Q&A with our speakers. So if you have any questions for our experts, please go ahead and submit these in the Q&A box at the bottom of your screen at any stage throughout the presentation. I do suggest, however, holding off questions on the temporary wage subsidy scheme until after Deirdre's presentation. Then when it comes to the Q&A session, after each presentation, I will enable your mic and I will call upon you to ask your question directly to our panel. When it comes to the Q&A, please be mindful that this session is being recorded in order to make it accessible to you and to others on InterTrade Ireland's website. And therefore, in asking your questions, please be aware of confidentiality issues. Your experience with us today is very similar to those of any virtual meetings that you will have attended. You can interact with us by raising your hand, asking a question in the box below, like I've explained, but we will also be issuing polls throughout the event. These will help our speakers gauge the current position and the need of those joining us in today's webinar. These will pop up on your screen as and when they are released. The only difference with a webinar is that we can't see you and we can't hear you until we enable your mic at the Q&A section. So hopefully that will have provided some clarity and help with a really interactive session again today. So without further ado, I am going to hand over the floor to Shane and invite him to come on camera and come on mic. And while he's doing that, I really hope that today's live session will be of help to you and your business during these really difficult times. So thank you, Shane. I am going to hand over to you.
Thank you, Caroline. Thank you. Good morning, everyone, and thank you for logging on to, as Caroline said, what is the second in a series of 6 webinars designed to help businesses navigate their way through the key supports that have been put in place in both jurisdictions in response to COVID-19. Business people are telling us that they welcome the range of available supports, but need guidance to decipher what is suitable to them, what they're eligible to apply for, and very importantly, to help keep them updated and as changes are made to these supports. We hope this interactive webinar will prove helpful in this regard. So this morning's session will focus on the financial supports that have been put in place to assist businesses in Ireland. But before we get started, I'd like to take a very quick opportunity to bring to your attention the supports that InterTradeIreland have recently put in place to assist businesses during these uncertain times. Firstly, eMerge. eMerge offers up to £2,500 or euro equivalent, fully funded consultancy support and advice to help your business develop online sales and e-commerce solutions. Secondly, the Emergency Business Solutions offers up to £2,000 or the euro equivalent, fully funded consultancy support and advice to address key business challenges, including cash flow, HR, and supply chain issues, and many more. Eligibility criteria for these 2 programs are the same. Simply, the company has to be a manufacturing or tradable service business registered on the island, has a satisfactory trading history, is engaged in cross-border trade, has the capacity to deliver the project over the coming weeks, and is an SME in that it is less than 250 employees and turnover less than 40 million. Additionally, InterTradeIreland have produced 2 excellent resource documents that are very much complementary to these sessions, one specific to Northern Ireland and the other Ireland. These are available on our website and they summarise the key information you and your business needs to know. Finally, alongside TAC Ireland, we have helped create an online platform in the form of an interactive map, which allows businesses to see who they can work with to combat the many supply chain and manufacturing challenges created by the pandemic. All these supports are available to view and find more information about on our website, intertradeireland.com, and I'd encourage you to do that. So before I hand you over to Feargal, I'd just like to say a couple of very quick thank yous. Firstly, to Deirdre Lynch at ByrneWallace Solicitors, and to Aidan McKenna at Enterprise Ireland for giving up their time to join us this morning. It's really greatly appreciated. Also to Feargal and his team at PKF-FPM, most notably Michelle and Caroline, for putting these webinars together for us. So that's enough for me. I'm going to hand you straight over to Feargal and we can get started on this morning's webinar. Thank you, folks. Enjoy.
Good morning, everyone. As Shane said, my name is Feargal McCormack and I'm the Managing Director of PKF-FPM Accountants Limited. We have 5 offices across the island, and I'm delighted to be joined this morning by my colleagues, Michael Farrell and Patrick McKenna. And the objective of my presentation will be to give a holistic overview of the COVID-19 financial supports. And I stress it will be an overview. I don't plan to go into each slide in detail, but rather to use the slides as an aide-memoir. And I'm very conscious, perhaps maybe you could open up from the start there. Yeah, I'm very conscious that I'm being joined this morning by Deirdre Lynch, a leading employment lawyer and partner with ByrneWallace, And as Shane has already said, by Aidan McKenna, Regional Director of Enterprise Ireland, and both Deirdre presenting and Aidan will come in at key times through the Q&A, obviously to deal with Enterprise Ireland, etc. However, really a key part and objective of the webinar series is to encourage and facilitate proactive participation by those of you who are joining us this morning. And for this reason, as Caroline has already said, we have 6 polls within my own presentation, and the plan is that you simply answer the question very quickly and we'll share the result with you. And also we have 2 Q&A sessions, and we'd really encourage you, please, because I think that's the main value of these webinars, and therefore at different times I will be doing a high-level review rather than going into specific details. However, my entire slides and those of Deirdre Lynch's will be available in PDF form after the webinar. So if we get off to a start testing how you're all going on the clicking. So what we'd like you to do is to answer the question, have you had to cease all or part of your business, by simply clicking yes or no, please. And you can see there that, interesting, over 63% of the people joining us have slightly rising now, I think, to 63% of the people joining us actually have had to either cease all or part of their business. So if we then move on, we start with the temporary wage subsidy scheme. As I've already said, Deirdre Lynch will be providing a detailed insight into this scheme. So I'm just going to highlight a few issues and then move on, but they're important in terms of the overall context of the presentation. And that is that the scheme basically was to provide financial assistance for employees who were affected by the COVID-19 pandemic. And basically it's running currently for 12 weeks from the 26th of March. It's administered by the Revenue Commissioners through the Ross system, and is paid to the employee by the employer through the payroll system. Now, it's fair to say that it applies to employees who make top-up payments and to those that are not in a position to do so, employers that make top-up payments. I think the one point I'd like to highlight in this slide is that unlike the furlough scheme in Northern Ireland, it is not a condition of the scheme that the employee cannot do any work. And that's an important point. Equally important is to appreciate that the tax on the subsidy payment will not be collected through payroll. However, a subsidy will be liable to income tax and the universal social charge at the end of the year. I'm not going to cover the eligible employer and the eligibility because Deirdre is going to do all that. What I would like to highlight here in terms of cash reserves, which is an important point, as most of you will appreciate over the last couple of weeks, the Revenue have been continually updating their advice and providing clarification. And there was an important clarification provided with cash reserves because they had received many queries about the impact of cash reserves on whether an employer was eligible. And they updated their guidance just last week. And in essence, what they're saying is that the presence of cash reserves will not result in an employer being ineligible for the scheme. Obviously, the government would expect business with strong cash reserves to pay a significant proportion of their employees' wages, and they should, but it's not. It has to be taken into consideration, but it will not rule you out. That's a very important point. Again, we will cover the verification checks and the eligible employee and all the rates. And I just finished by saying the tips. A few tips I'd say. It's really important you keep up to date because, as I've said, the Revenue are continually issuing further updates. Secondly, I think employees who are concerned about their tax bill in relation to the temporary wage subsidy scheme and POE refunds received during the operation of TWSS, they can basically change their cumulative base if they wish to week one, month one base of taxation via my account, which you'll be familiar with on revenue.ie. The most important thing I want to highlight here, and I think Deirdre will also highlight this to you, is you really should retain records and documents which provide evidence of the negative impact that COVID-19 is having on your business. And that's very important. So in that context, we'd just like to get a feel for how many of the organisations who are participating this morning are actually using the temporary work subsidy scheme. So what we're trying, and what proportion of your staff that you're using it with. So we'd appreciate if you could give us a quick indication here by answering the question on the screen. You can see a very significant range there of answers. I see 30, I think it's 33%, between 90 and 100% of employees being dealt with it. So it's interesting there, the spread. That's a broader spread now today, really, the temporary wage subsidy scheme, than we actually see really the furlough scheme in the north. So if we move on then, and we touch basically on a few key both grant schemes and also then fundraising in terms of banks, etc. The pandemic unemployment payment scheme, just draws to your attention. This is available to employees who unfortunately have lost their job due to COVID-19. It's also available to self-employed individuals whose trading income has ceased due to COVID-19. Now, it's paid directly through the Department of Employment Affairs and Social Payment, and currently it's a flat rate of €350 per week, regardless of your pre-COVID income. Unlike TWSS, it applies to non-resident employees as well. And I think just to put that in perspective, particularly in the InterTradeIreland context, I'd like to share a few examples. For example, at the bottom of the slide there, you can see if you have a cross-border worker who lives in Ireland but who's working in Northern Ireland and they lost their job due to COVID-19, they can claim the COVID-19 pandemic unemployment payment in Ireland. So they claim it in their place of residence unemployment. However, if we go to the other example and we look at, say, a Northern Ireland resident who's actually working in Dublin, and you can see the details are single, etc. Now, if you think about it, they've been laid off due to COVID-19. They're not entitled to the ROI COVID-19 unemployment benefit of €350 per week. But believe it or not, and you'll see later on that what they would be entitled to is universal credit, which is very low. You'll see later on that in this case, if their employer, instead of making them, if their Irish employer, instead of making them unemployed, had actually operated the temporary wage subsidy scheme, they would have qualified for 70% of their wage, 70% of their 580, which basically is €406 per week, which is actually less than the cap of 412. Now, just compare that to what would have happened to them if their employer in Ireland had continued to treat them as unemployed and didn't decide to treat them under the TWSS scheme. They'd then be entitled basically to claim what's called universal credit in Northern Ireland, and they qualify for £323 approximately per month. Now, that's per month. And compare that to the ROI pandemic unemployment rate of €350 per week. I know the small typo there on the 323, it should be pounds. So you can see that basically by a little bit of smart manoeuvring and understanding by the Irish employer, that you can look after your cross-border person significantly by putting them under the TWSS scheme as opposed to making them unemployed. And that's all because of the EU regulations that unemployment benefits must be claimed in the state of residence. But a little anomaly, because you can think, if you think of it, the Northern Ireland person has been paying all the taxes in Ireland, but they're not benefiting from the higher unemployment benefit in Ireland during COVID-19. Now, similarly, in respect of illnesses for the COVID-19, the good news here is that the government has enhanced the benefit from €203 per week to €305 for those workers who are told to isolate by a doctor or the HSE due to COVID-19. And equally important, from a cash flow perspective, there's no 6-day waiting period before payment. again, to be fair, attractive help. Now, for those companies that are deemed, they don't believe they're deemed eligible for the temporary work subsidy scheme, but they feel that due to the impact of COVID-19, that they need to reduce working hours and put people perhaps in a 3-day working week. Well, where they would get assistance is from the short-time work support. And it provides payments for employees that have been temporarily placed in a shorter working week. It's fair to say that the rate depends on the average weekly earnings, and if you, for example, if you place somebody in a 3-day working week, then potentially they'd be entitled to up to €81.20, euros 20 for the 2 days they're no longer working. Not as attractive as the temporary wage subsidy scheme, but the good news is it is not taxable income. Now, last Friday, if you were keeping your eye on the media sector, the Irish government made a very significant announcement of a new 6.5, I'm afraid it wasn't million, it was billion support package to help businesses hopefully start the recovery post, or certainly during the exit of the plan transitioning of reducing some of the restrictions in terms of COVID-19. And this comprised a number of elements. One was a €10,000 restart grant for micro and small businesses based on the rates waiver rebate from 2019. The second, and we're going to talk about this slightly more, was targeted at larger businesses, and it was a €2 billion pandemic stabilisation and recovery fund within the Ireland Strategic Investment Fund, and we'll come back to that, mainly targeted at medium to large size businesses. The third was very significantly, a warehousing of tax liabilities for the period of 12 months after recommencement of trading. So if your business had ceased during COVID-19, once you recommence, you're now being given a warehousing, a holiday basically for payment terms. And that's very significant. And that covers basically your VAT, your POE, your corporation tax, etc. And the next point is also important because they're waiving the commercial rates for a 3-month period beginning on the 27th of March for businesses, and be careful, which have been forced to close due to the public health requirements associated with COVID-19. Now, I referred earlier to the Ireland Strategic Investment Fund, which is called the Pandemic Stabilisation and Recovery Fund, and this is targeted at large companies, medium to large companies over 250 employees with a turnover in excess of 50 million. And again, the investment, which is interesting, can be in a range of instruments, including equity, debt, and other hybrid instruments, and will be complementary to other government agency supports. And again, that's an important point to pick up, and we'll talk about that later on in the presentation. So again, we'd like to get a feel for what proportion of the businesses participating in today's webinar have actually had access to government grants yet. And we'd appreciate if you would just indicate by a yes or no. Well, this is showing up quite a surprising, I think, result, that 72% of those participating in the webinar have not yet been able to access grants. Now, I'm sure that's something that the various grant agencies will be looking at, and perhaps it's partly due to the fact that we're in process currently and their applications are being proceeded, and again, business plans. So I don't think we should panic, but I think it is an interesting conclusion to draw. Now, you know, raising finance in terms of bank finance, I think, where should I start? And this is obviously one of the key objectives of the webinar, to try and steer you and navigate you a little. Well, the truth is that this is actually a very important slide to understand, because where you should really start is by, first of all, trying to establish, do you potentially, is your business potentially eligible for the two large loan schemes brought in, supported by the Strategic Banking Corporation of Ireland, brought in to help businesses during the COVID-19 pandemic. And that's basically the Working Capital Scheme and the COVID-19 Future Growth Scheme. Basically, there are two broad criteria. One is that you would have to show that you've spent 10% of your operating expenses in any one of the last 3 years on innovation, or that 80% of the loan that you're seeking will be spent on R&D activities going forward. Now, I suggest to you not to panic, because our interpretation, and we've actually seen some of these examples, is that the definition of innovation and is quite relaxed, and it's in the context of COVID-19. And I'm going to share with you some case studies shortly in that regard. Now, if for some reason you're not eligible for either of those two schemes, you then go back into the normal banking arrangement. And even if you're in the normal banking arrangement, the good news is that there's also support available for you in terms of COVID-19, specific support available in terms of an extension of the credit guarantee scheme with support from the Strategic Banking Corporation of Ireland, which again I'll explain shortly. A very interesting and exciting sustaining enterprise fund operated by Enterprise Ireland, again as part of a tripartite funding arrangement. And finally, for smaller businesses, there's the microfinance COVID-19 loans. And we'll cover each of these briefly. But first of all, in terms of the working capital scheme, which obviously is targeted at businesses, SMEs less than 250 employees with revenue less than 50 million, or a balance sheet less than 43 million. Obviously, the businesses must be viable. People don't want to give you loans if you can't demonstrate that going forward, post COVID-19 or post the main elements of COVID-19, that the business can again become viable. And in terms of features, the loans are between 25,000 to 1.5 million euros, and they range from 1 to 3 years, because this is a working capital scheme. And significantly, the SBCI, the Strategic Bank Corporation of Ireland, they're providing an 80% guarantee to your bank. And the first 500,000 is unsecured, and there may be interest-only options may also be available at the outset. Now, as I've said, this is obviously for working capital, short-term needs, funding, innovation. You apply through the SBCI website, and then basically, if you meet the eligibility criteria, you then proceed to the core banks such as AIB or Bank of Ireland or Ulster Bank. Now, on the right-hand side, that's the 2 points I was highlighting to you about the two key criteria: the 10% of operating costs on innovation in one of the last 3 years, and the 80% of the loan going forward being R&D. But to reassure you, we've tried up with some examples to assure you that the test for innovation is not that demanding. For example, if you were a service training business which was closed due to COVID-19, you're now requiring working capital in order to continue to pay wages to some of your key staff and meet bills, overhead bills, etc. But business has now no income. If you think about it, you're closed. However, you're assuming you're going to be opening in, say, hopefully less than a year. The innovation there, we believe, would be the reorganization of the staff work processes to avoid infection. And that will hopefully get you to meet the eligibility criteria. Similarly, if you're in the services and manufacturing sector and you're reorganizing employees into teams to limit the contamination effect of 1 or 2 people becoming infected, which will then limit the efficiency and output, giving rise to increase then working capital needs. Again, we believe you can meet the innovation criteria by demonstrating that you're now proposing to reorganize your staff work processes to avoid infection. Thirdly, if you're, for example, in the retail sector and you need increasing working capital requirements as the shops adapt to increased demand and indeed changing demand, including increasing staff costs due to perhaps the longer hours you have to stay open in order to service the customer and service smaller numbers in the shop at any one time, and indeed perhaps payments to staff are unable to work. And again, this could be down to shop layout or employing extra security staff to control people entering. And in terms of a haulage business, again, if all of a sudden you're changing your activity to now perhaps moving goods for a clothing manufacturer who's making PPE equipment, again, we believe you've changed to a new market, and that would deem perhaps innovation. In our experience, that will deem innovation. Again, if you're a business, if you're a business because your overseas markets are particularly dominated by countries that are being impacted by COVID-19 in creditor days, and you wish to change your suppliers and market to make it more eligible, again, we believe that should be eligible. Finally, if you're a restaurant and you want to perhaps convert your business to more fresh produce or other service, even delivery of cooked meals. Again, the change of business activity. Again, if it's explained and it's genuine, we believe should get you to qualify for innovation. And finally, you know, pubs and restaurants closed for 3 to 6 months. Again, I think what we're trying to highlight here is if you're introducing changing processes and a business model to cope with the challenge of COVID-19, hopefully this will be deemed as eligible from an innovation point of view. Now, the difference in the future growth loan scheme relative to the working capital is very simple in that this is for the long term. It's still targeted the same group of businesses. The loans range from 100,000 to 3 million. There's a variable interest rate of 4.5% for less than 250,000 and 3.5% for over 250,000. The term of these loans can be from 8 to 10 years. Again, 10% guaranteed and unsecured up to 500,000. So again, you can see these loans, for example, would be for machinery, equipment, business expansion, premises improvements, large items, R&D. But the 80% guarantee, very attractive if you get eligible for these loans. We did say earlier on, I mentioned, if you remember, the SBCI credit guarantee scheme. And really, excuse me, this is a scheme whereby if your banks that you're going to, the pillar banks that you're dealing with, are concerned from their risk profile, particularly from a security perspective, that you're lacking adequate security for them to give you the grant or to give you the loan, they then refer your case to the SBCI and try and get approval for it under the SBCI credit guarantee scheme. And if this happens, it's good news because the loans basically range from 10,000 to 1 million. And the lending rates are just plus 0.5%. So you can see it's very attractive. It's 80% guaranteed, and it will be operated by the core pillar banks with support from the SBCI. Now, I mentioned earlier on about the key Enterprise Ireland Sustaining Enterprise Fund. I suppose the key to this fund, and I'm conscious, I'm very glad, by the way, not conscious, very glad that Aidan McKenna is with me, and Aidan will obviously deal with this in the Q&A sections. But this basically was designed to be part of a tripartite funding arrangement. Again, where basically businesses were having difficulty in isolation getting funding from the bank. However, operating as a tripartite funding arrangement between the promoter, the bank, and Enterprise Ireland, this can become a deliverable funding opportunity. Now, it's fair to say Enterprise Ireland will look on the merits of each case on its own and the needs. But again, it's a very strong scheme. It's a repayable loan up to €800,000 with an annual administration fee of 4% and a 3-year grace period on repayments. So very attractive scheme. And again, you go about it first of all by contacting your development advisor within Enterprise Ireland, but Enterprise Ireland will want evidence that you have been in consultation with the banks before they would look at this case in detail. And similarly for smaller businesses, again, experiencing difficulties in terms of getting finance from their banks, they can avail of the Microfinance Ireland COVID-19 loan scheme. And again, you can see less than 10 employees, revenue less than 2 million, and now you would have to demonstrate that you've had a 15% reduction in actual or provided turnover or profitability to deem. But again, very attractive. Loans of 5 to 50,000, APR of 4.5% for applications through your local enterprise office, or 5.5% of the applications are direct. And very significantly, there is no repayment for the first 6 months, either capital or interest. So again, obviously in terms of, it does require a business plan, it does require the completion of an application form, cash flow forecast, etc., as any significant, to be fair, proposal for finance will require. Now, again, to try and get active participation, get a feel for what number of people participating in the scheme have already at this stage prepared emergency cash flow forecasts and business continuity plans, would like if you would answer our question 4 in the poll. So again, interesting to conclude, 53% have undertaken emergency cash flow forecasts and business continuity plans. If I'm being honest, I think that's slightly disappointing. At this stage, I think one would have expected the proportion of businesses to have done cash flow forecasts and business continuity plans to be higher than 53%. And obviously, maybe there's a greater challenge for all of us involved in advising businesses and trying to promote business and get businesses ready for the post-recovery stage, to encourage more businesses to give this an urgent priority. And maybe if we could then ask you a further question, have you accessed additional bank support as a result of COVID-19? And again, if you wouldn't mind giving us a yes or no answer, please. And we have confirmation there, 27% basically have so far accessed additional bank support or secured additional bank support as a result of COVID-19. So if we move on then, and as I said before, Aidan McKenna will help us greatly with these later on, but Enterprise Ireland have brought in a few specific programs targeted exclusively at COVID-19. You have the COVID-19 Business Financial Planning Grant and the Retail Online Scheme, and then you have other schemes of their core schemes which are very applicable to COVID-19, and then you have the broad Enterprise Ireland schemes, which I don't plan to go into detail, but I've no doubt if there's any issues that people would like to clarify, Aidan will be more than willing to do that. In terms of specific COVID-19 schemes being operated by Enterprise Ireland, the Business Financial Planning Grant is for €5,000 in funding for internationally trading companies to access an approved financial consultant. And it's designed to help companies to develop strong financial plan, including the preparation of documentation required to support applications for external finance. And it's fair to say, looking at the results of some of our polls in this webinar, it would appear this is an area that perhaps there needs to be a little bit more take up on in terms of businesses. And finally, the Retail Online Scheme is 80% grants ranging from €10,000 to €40,000 under a competitive tender scheme. And to qualify, the business must be an Irish-owned retail enterprise and have 10 or more employees and have an existing online presence and the potential to create jobs and generate, obviously, future growth. Now, it's fair to say, as I said, within the existing Enterprise Ireland portfolio of various schemes, there are a number particularly appropriate to COVID-19 and could be availed of, such as the Rescue and Restructuring Fund. And again, that was just announced in the budget 2020. And it's basically, it supports people under temporary restructuring. And it's between 100,000 to 3 million available per company. Very attractive scheme. And similarly, obviously, innovation. The key drive has to be here to make us more competitive, both in our domestic market, but more importantly in the international global market, is to innovate and differentiate our products or services. And again, to be fair to Enterprise Ireland, they have a number of excellent programs there, such as the Agile Innovation Fund, the Business Innovation Funding, and R&D funding that businesses can avail of. Similarly, the diversification, because as you remember in some of the examples we gave back on the working capital case studies, some of the responses to COVID-19 may well be an emphasis on diversification of product range or service range to meet the changing behaviours or attitudes anticipated post-COVID-19. And obviously, competitiveness, lean methodologies will be more relevant now than ever. And again, potentially upgrade the capital expenditure of €250,000 assistance is available under the competitiveness scheme. So these are really attractive schemes, and I've no doubt Aidan will be more than willing to go into these in more detail, and the more generic schemes that Enterprise Ireland has available. Just to highlight in this scheme, the fourth bullet point down there, the COVID-19 Act On initiative, which Enterprise Ireland are offering advice, support and access to external consultants on strategic sourcing, transport and logistics. And I heard Judy Simmons, Enterprise Ireland Chief Executive, on the radio this morning, and she was highlighting how keen Enterprise Ireland were to help businesses. And similarly, the Rapid Response Research and Innovation Programme is there to help mitigate the COVID-19 pandemic, working in association with other government agencies. If you look at your local enterprise office, which are obviously very important to our small and micro businesses, again, they have brought in some specific grants for COVID-19. And in terms of specific grants, they brought in a business continuity voucher for €2,500 in third-party consultancy costs to develop short and long-term strategies. And to be fair, this is aimed at having just a third party assist you and to facilitate you in informing decisions and how to protect your staff and sales. And then they similarly have a trading online scheme voucher designed to assist small businesses with support up to €2,500 along with training and advice. And really, there are a number of other local enterprise office schemes similar to that are particularly applicable to COVID-19, such as the Lean for Micro, the mentoring, and the training and webinars. And that's a free program, basically, that they're operating, the training and webinars. So again, I would encourage you to go to your local enterprise office and have a chat with them. We have, from our own perspective, we have a number of clients who have done that, and I must say are giving excellent feedback on the welcoming response they're getting from the local enterprise office. So we'd encourage you to use your local enterprise offices and the various core programs they already have, which may assist you actually in addressing the challenges of COVID-19. Now, Shane already covered InterTradeIreland, so I don't plan to cover their two new schemes, the Emerge and the Emergency Business Solutions. Suffice to say that the significant point here is that it doesn't only apply to InterTradeIreland programs or companies who've been involved in InterTradeIreland programs. It is now basically extended and made available to all businesses who are operating on the island of Ireland who met the criteria that Shane, very generous criteria, not too restrictive, that Shane referred to earlier on. And just finally, before concluding, just a few sweep up points to raise in terms of other revenue and government supports. And first of all, we talk about the deferment of VAT and POE payments from January 2020. No interest will be charged and no enforcement action taken by the authorities on NIP payments of VAT and POE. However, and the however is probably the most important wording on this slide, companies are still asked to submit their returns on time. And in order to get this deferment, you have to meet this requirement. VAT rates, as I think most of you have heard at this stage, there's a lot of PR about it. VAT rates for the supply of personal protective equipment, ventilators, and other medical products have now been reduced to zero temporarily. Similarly, the Revenue Commissioners have said there will be no surcharge on the late submission of a corporation tax return for the period ended 30th of June 2029 onwards until further notice. And the closed company surcharge on undistributed investment income, the deadline for that has now been extended for an extra 9 months. And more importantly, the RCT rate review due to take place in March 2020 has been deferred and suspended by the Revenue. So again, these are all very important concessions that I think will help cash flow of businesses. The next one is very important. R&D tax credits, very important to businesses at present. R&D and what the Revenue have agreed to do here is that they're trying to bring this forward to allow people to make these claims quicker. Again, the benefits in kind rules for company vehicles have been relaxed during COVID-19, and the CRO have made changes, believe it or not, to the annual filing returns. Once your B1 is now raised online before the due date, you have until after the 30th of June to submit it. So I think you're seeing a genuine, really attempt by government to be as helpful as they can. And the Department of Children, along with the Revenue Employee Support, they're also reimbursing childcare employers by 30% of their pre-COVID-19 staff costs, along with providing funding to meet ongoing staff costs where needed. So just before we conclude, I think I'd like to invite you to participate in one final poll, but a very important poll. We're trying to get a feeling, do you expect your turnover to fall in 2020? Because remember, some businesses, it's actually growing because their service, the health service out there. And if so, by what proportion? I would appreciate if you would indicate in the poll question here now coming up on the screen. And very similar to yesterday's poll, the largest category is the 20 to 30%, with 22% of businesses expecting turnover to fall between 20 to 30%. So again, very interesting, and a lot of things for thought, believe it or not, in the results of that poll. And now I'd like to invite Caroline to coordinate a Q&A session, and I'm looking forward to my colleagues Michael Farr and Patrick McKenna join me, and Aidan McKenna particularly. Aidan, if Aidan would come in any Enterprise Ireland stuff, and certainly after the next Q&A session, we'd like Aidan to sweep up maybe on what I certainly gave was only an overview on EI. Caroline.
Thank you so much, Feargal. A lot of really useful information on the financial supports available. There are a few questions coming in just before we invite Deirdre Lynch to come and speak to us. So can I invite all the panelists and experts to come on camera and come on mic, and while they're doing that, I will introduce them. We have Aidan McKenna, who is the Regional Director of Enterprise Ireland. We have from PKF-FPM with Feargal, Michael and Patrick McKenna joining us, and we have Deirdre Lynch, who is partner of ByrneWallace Solicitors. So we are going to open the floor now. The first question is from Maria, and Maria, I'm going to enable your mic and allow you to ask your question to the panel. Maria, can you hear us?
Sorry. No, sorry.
There we go. Hi, yeah. Maria, how are you? Ask your
Good,
question to the panel.
So I have two questions. The first one is the warehousing of tax liabilities. Is this contingent on you having had to close your business during COVID-19, or if you have had your business open but on a lower level of turnover, can you still apply to warehouse your tax liabilities?
Sorry, maybe I'll take that one. So Maria, you don't need to. There's nothing in the announcements to say that the business needs to close. What it says is that, I suppose, is that at the end of the scheme, you would have originally decided to defer your tax liabilities to start off with. So the stage one was the deferral of the tax liabilities, your VAT and PAYE, and then stage two, which is what was announced on Friday, is once you know the real concern, I suppose, within the business community was, you know, we defer these liabilities and we come out, you know, of this of the pandemic, and we don't have the ability to immediately pay. So what revenue is saying, once you defer your liability and PAYE and tax for the period of the COVID, whatever the period of COVID is, then it's 1 year after that you can within agree a warehouse period, and you within that 12-month period you can repay the liabilities in agreement with revenue with no interest, and then after that period there'll be a reduced interest period, and they're saying it's likely to be 3%.
Okay, sorry, do you mind if I just see that I understood that correctly? So say for my company has paid all of their tax liabilities up to date, so the next one's due is the March, April VAT return.
Yep.
Say for the March, April VAT return, if I go on, input my VAT return, don't make a payment, and send in a notification on the My Queries part of ROS to say I'm looking to warehouse these debts. Is that how it happens? And then it's a year from that you start your paying?
No, I think so. You decide, you go on ROS and My Queries, and you decide, the first part of it is you must file on time to enter the scheme. So your March, April VAT return needs to be filed on time, but you don't pay that liability, okay? You defer that liability. The warehousing is a separate issue. So in order for you to qualify for the warehousing, you need to have deferred the liability. And then the warehousing will happen after that. So your March, April VAT return, you will defer the payment. So you'll file on time and you won't make the payment. You may also be doing that for the next VAT return period too. It depends on the period of the COVID scheme. And then from whenever government announces the end of COVID, then the announcement on Friday says that you will have 12 months from that period in order to enter into an agreement with revenue to repay that. And during that period, there won't be any interest charged on the payment scheme. So to answer your question, yes, you would go on to March, April, and you would file your return on time. You don't pay the liability, you defer it. And then whenever the COVID period ends, you will enter into an agreement with revenue in order to repay the warehouse liabilities.
Thank you, Michael. Hope that answered your question. We're going to hand over to Pauline Flynn now. Pauline, do you want to come on mic? I've enabled your mic and you can ask your question.
Thanks, Caroline. This is a sort of a general one, and maybe it's for yourself, Feargal. I work for a social care charity in the south. Our biggest impact, we're still getting our grants or our contracts being paid by the public sector bodies we work for, but it's front end social care. Our biggest problem is increased staff costs due to staff sickness or isolation or any of those measures, and additional PPE that were never provided for under the contracts. Is there any of these schemes, loans, grants that are actually applicable to an organisation in our circumstances?
Maybe ask Patrick to take that. Patrick, if you don't mind, I got some more your area.
So I suppose, Pauline, it's a difficult question at the minute. And I've seen your question come up, and I've been trying to look into.
Sorry, Patrick, I can't hear you.
Sorry, give me a second. Can you hear me now, Pauline?
Yes, that's brilliant. Thank you.
Sorry, maybe it's just a bit far away. We're looking into it further, Pauline, here just on screen. Your first protocol is to go back to the public sector and see, will they extend their funding? If not, then it is looking under the various different loan schemes to see, do you qualify? Do you have any facilities currently with your bank or to your bank?
No, we do have cash reserves. Our turnover would be quite low, but we do have some cash reserves. But they're group reserves. It's an All Ireland group, you know, with a subsidiary in the south. The employees in the south would probably be borderline the 250. The turnover would be in and around 12 million euro. So we probably wouldn't qualify, I think, as for any of the smaller, sort of small, medium-sized type loans or grants or anything like that. We don't think we would be able to enrol anybody or use the temporary wage subsidy scheme in any shape or form. So we're left with the additional cost. Obviously, we're trying to approach our commissioners to see if we can get additional funds. But, you know, that is usually an empty pot that's never filled, you know. So although we're running down our cash, we're not running out of it, but obviously it's not a good situation where we're in more deficits this year than we would expect to be.
Pauline, what I suggest is, because it's quite specific, obviously, to the first sector itself, that we will make further inquiries, because I think what you're doing actually is what we would have recommended you do, that you communicate immediately with your commissioner, to try and highlight to them that your first priority is your patients, which you're dealing with, but that obviously you're having to incur additional costs with PPE, etc. And we'll come back to you specifically offline, if you don't mind, and discuss a couple of other options with you.
Right, okay, brilliant, thank you.
Thank you, Pauline, for your question. Next up, the next question's in from Huzum Jerby. Apologies for the pronunciation of your name. I've enabled your mic. Do you want to come and ask your question to our panel?
Yes,
Go ahead.
thank you. So the first question was about the grant, the restart grant of 10K that was announced as part of the latest government support. Do you know any details about the eligibility criteria? That's number one. And question two, from the different support provided by Enterprise Ireland that Feargal presented, which are the support that will be open to companies who are not Enterprise Ireland clients? Thank you.
Really, the Enterprise Ireland one I'm going to ask Aidan to deal with. Maybe just first, very briefly, Paddy, can you clarify the further details are to be forthcoming at the announcement on Friday, read the small loans?
Yeah, so Listen, basically at the minute, it's waiting on the new government reform to finalise the details of the 10 grand grant. So that'll be forthcoming over the next couple of weeks, hopefully. So unfortunately, at the minute, there's no further details on who is eligible.
All right, thank you.
And over to Aidan, maybe read the Enterprise Ireland query.
You can. I just got a little bit more information. Can you explain what your business is, what sector, and how many employees you have?
Yeah, we are a startup based in Dublin. We are in the ICT space, artificial intelligence and technology space, and we've got 4 employees.
Okay. How many employees?
4.
4 employees. So we have, we're in the process of launching and communicating a bit more aggressively our supports for startups. We would, on average, fund between 80 and 100 startups every year. A lot of the funding is equity funding, and a number of those businesses are under 10 people, but with the potential to get to 10 people or $1 million in revenue in 3 to 4 years. So these particular companies will struggle, obviously, to get some of the funding loan support, such as SBCI. We're now looking at extra equity packages and also grant packages against what's considered applicable expenditure or applicable business plans as such. So I think your first port of call is definitely to speak to your high potential startup development advisor, contact them. And also, if you've already received some equity investment from previous funders, I would also be encouraging you to contact them. There's a few other venture capital companies and groups looking at this particular issue at the moment, and there's a lot of work going on behind the scenes to actually bring out a funding instrument a little bit more specific to companies such as yourself. But I would definitely encourage you to speak to your development advisor, and we would look at further equity investments to support your business and your short-term capital needs.
I hope you would take some encouragement from that, a bit of advanced positive, potentially positive news for your business that Aidan has given you. And again, it highlights the importance of having somebody of Aidan's stature and caliber in the Q&A session, and we're able to hear such up-to-date policy decisions.
Thank you, Husam. Thank you, Aidan. Ray's up next. Ray, I have enabled your mic. Do you want to come and ask your question to the panel?
Yes, hi. The company I work with, we do a lot of business with semi-state bodies, and we'd like to avail of the warehousing of our taxes. How does that affect your tax clearance status?
So the important thing, Ray, in that respect, is to make sure that you file on time. So if you file on time and defer the payment, so think about there's 2 things: is deferring the payment first, which has been in place. So the deferring of that payment under the COVID scheme does not impact your tax clearance cert.
Okay. And
then following on with that, the warehousing piece, it couldn't imagine how that would impact the tax, because there's an agreement with revenue. So that should be fine.
Okay, thank you.
Great, thank you. We have a couple more questions, and I see there are a few on the wage subsidy scheme, which we're going to defer until after Deirdre's presentation. But Niall Mahern, do you want to come on and ask your question? I've enabled your mic.
Yes, thanks very much. Basically, I'm pivoting my business. Basically, I was going into DNA analysis, sequencing for industrial, commercial, medical, and pharmaceutical industries. But this technology I have the license for. It's real time or reverse transcription PCR testing for the COVID virus, 7-hour turnaround. But I have been on to Enterprise Ireland for the high potential startup and that, and I've been refused. I got the email back there the other day about it. Like this can help people and businesses put their plans together to start reopening their businesses. And I'm just sort of frustrated at the moment on how to get this to market. It does, you know, it's the 7-hour turnaround. It doesn't look for antigens, it doesn't look for antibodies. It looks for, do you have the virus now? So, you know, it could be of very commercial value there. And I'm just wondering what direction I should go in it. Thanks.
Caroline, do you want me to take that?
Yes, please.
Brilliant. Thank you, Aidan.
So Niall, if you want to, perhaps, and Caroline, feel free to share my contact details with Niall after the call. If you want to give me your, I guess, your proposal, I'm happy to have a call offline and discuss the application. And maybe it's not for this forum, but happy to have that conversation directly after the call.
Brilliant, thank you.
Wonderful, thank you very much. Last question, we're going to defer the remaining ones until after Deirdre, but our last question is through from Lisa. Lisa, I have enabled your mic. Do you want to come on and ask your question? Lisa Roundtree, yes.
Sorry, I didn't have a question, Caroline.
Apologies.
I was just responding to one of the ladies earlier who said she was a social enterprise.
Not a problem.
We're a social enterprise too, and we've been very clearly informed that if we feel we're being treated unfairly, we have to get on to the Department of Rural and Community Development, because a social enterprise is an enterprise and should be deemed as such and treated the very same as any other entity. Wonderful. So she definitely has to rattle cages to get through and get the support. And we did go for the wage subsidy, and again, I've applied for anything that's out there. I've gone with on the basis that I'm a trading enterprise regardless of my structure.
Thank you, Lisa.
Okay.
Thank you. So on that note, we are going to hand over to Deirdre. I am going to ask all the panelists to turn off their camera and their mic, and ask Deirdre to turn on her camera and her mic and share your presentation with us. Hand over to you. Thank you, Deirdre.
Great. Thank you very much indeed. Great. Hopefully I am sharing my screen. I think that's the most difficult part of the presentation. Good morning, everyone. I'm really pleased to be with you and to have the opportunity to speak with you today in relation to the many varied and very novel in many instances employment law issues which I have encountered as an employment law advisor over the past number of weeks. I suppose it's fair to say that never has so much changed so dramatically in such a short period of time in the employment law world. And this was a theme, I think, of Feargal's presentation, that there has been much change and there is ongoing change. So it is extremely important that you keep abreast of the ongoing updates to the temporary wage subsidy scheme and indeed the various other schemes and grants which are available. I'm going to discuss a number of issues. Firstly, the temporary wage subsidy scheme, which provides an unprecedented level of support to employers who keep their employees on payroll. Secondly, I'm going to look at some very important changes to the law relating to layoff and short time. And then I'm going to take you through some of the questions which I have been asked by employers who are currently trying to navigate their way through the difficulties that they're encountering as a result of the COVID-19 crisis. So to begin with the temporary wage subsidy scheme, this scheme was announced by the Irish government on the 24th of March 2020 and it came into operation 2 days later, the 26th of March. It replaced a previous scheme, the employer refund scheme, that had been operational for a 10-day period and was replaced by the temporary wage subsidy scheme. The essential objective of the scheme is to preserve that essential nexus between employer and employee for a period of time. Currently, it is envisaged that the scheme will last for a 12-week period. And the obvious thinking here is that if the nexus, if that essential link between employer and employee can be maintained, then in those circumstances, hopefully, the Irish economy will be in a position to bounce back more readily than it would otherwise be in circumstances where there would otherwise, I think, be mass redundancies and mass layoffs. The most recent statistics available in relation to the scheme are somewhat startling. Over 50,000 employers are now registered with revenue to participate in the scheme, and almost 500,000 employees have received at least one payment under the scheme. Overall, the cumulative value of payments made under the scheme to date is in the region of 785 million. So very significant numbers indeed. The scheme was brought in under a piece of legislation called the Emergency Measures in the Public Interest Covid-19 Act 2020. And in order for an employer to be eligible to participate in the scheme, a number of conditions must be met. So firstly, the business needs to have been significantly and adversely affected by COVID-19 in quarter two of 2020, resulting in an inability to pay the employees normal wages. The legislation which brought in this scheme refers to the employer having a firm intention of continuing to employ the employees who participate in the scheme and making best efforts to continue to pay normal wages. In terms of how you determine whether your business is significantly and adversely affected by COVID-19, the revenue commissioners under the legislation were required to publish guidance. They have done that, and the guidance provides particular guidance for employers in relation to eligibility and also in relation to the proofs. There is the 25% test, which is referred to in the legislation. So what this means is that, and you will be best placed as the business owner, you will be best placed to analyse this, but there must be a 25% reduction in either turnover or in customer orders in quarter two because of COVID-19. The guidance issued by the revenue has made it quite clear, as I said, that you are best placed to make that analysis. Also helpfully, I think it recognises that in the case of many businesses, the 25% reduction in either turnover or customer orders may not be something that works within, in terms of analysing the impact of COVID-19 on the business. And where that is the case, in other words, where the 25% reduction in customer orders or in turnover is not something which you can apply to your business, then the revenue guidance talks about some other reasonable basis for assessing the negative impact on your business, and it advises that you contact revenue where those tests are not applicable. There was some controversy when the scheme was introduced initially. There were many comments in the media to the effect that the wage subsidy scheme was essentially a declaration of insolvency, which would have had ramifications from a company law perspective. Revenue have been very clear in their guidance that that is not the case, that by applying for the temporary wage subsidy scheme, you're not declaring your business to be insolvent. The entire scheme is based on self-assessment. So the guidance makes clear that revenue are presuming that businesses will be honest in terms of their applications. Of course, there may be lookbacks and reviews done by revenue at some point in the future in terms of assessing whether or not employers who availed of the scheme were in fact eligible to do so. So it is very important, as Feargal said, to ensure that you do maintain appropriate records, both in terms of that 25% piece and the significant adverse effect on your business, and also in terms of the employees who availed of the scheme. So to move on and look at the next, I think my slide has just frozen. Sorry about that. The scheme is available to eligible employees. So in order to be eligible to avail of the scheme, the employee must be on the employer's payroll on the 29th of February 2020. And the employee's pay and tax details must have been reported to revenue in the qualifying payroll submissions, and the person must be kept on payroll. That's a key feature of the scheme, and goes back to the key objective of the scheme being to maintain that essential link between employer and employee. So if, for instance, you were to make an employee's position redundant, you thereby terminate the employment relationship and you would not be entitled to apply for the wage subsidy scheme in respect of that employee whose employment has been terminated. The next issue is whether or not the scheme is available in respect of directors or self-employed individuals. The scheme is available in respect of directors if they're being paid through payroll. It is not, however, available in the case of self-employed individuals. To look very briefly at the figures, the scheme has been introduced in 2 phases. So there was the transitional phase that was up to the 4th of May, and the current phase, which we are in, is referred to as the operational phase. One interesting change which was introduced with effect from the 16th of April was to bring more employees within the eligibility. And if an employee had an annual salary of greater than 76,000, and that works out at an average net weekly pay of greater than 960. So if that was the pre-pandemic remuneration of the employee, but if the employee has taken a pay cut such that the current payments payable to the employee fall below that 76,000, then in those circumstances, the wage subsidy scheme may be available in respect of those individuals. And I've set out on this slide the pay cut and the relevant wage subsidy scheme in respect of that category of employees. We're currently, as I said, in the operational phase. Thankfully on Ross, there is a CSV file which employers will be able to access. And there's also a very helpful calculator on Revenue's website, which allows you to plug in the figures. So the average net weekly pay of the employee and to thereby calculate the subsidy that will be payable in respect of that employee. You can also very helpfully, in my view, insert details of what additional gross pay you're going to pay to the employee, if any, and that will impact potentially on the level of subsidy payable in respect of that employee. But as I said, the calculator is extremely helpful and it makes it quite easy to work out the subsidy amount. So to move on and look at some questions, first of all, if my company avails of the scheme, will that be made public? And this is a question which has been asked of me by employers quite frequently. The short answer to that question is yes. Revenue have made clear in their guidance that they will publish a list of employers who availed of the scheme and details of those employers' addresses. And the reason for that is to ensure transparency.
Hello, Deirdre. Apologies to interrupt your presentation there. There's just an issue with your mic coming in and coming out. Could you perhaps move slightly closer to the mic?
Yes, absolutely.
Sorry, apologies.
No problem.
I'll hand back to you. Thank you.
No problem. Thanks, Caroline. So if you avail of the temporary wage subsidy scheme, that will be made public, and details of the name of your organisation and its address will be published. The next question has been, how long will payments last under the wage subsidy scheme? And it is currently anticipated that those payments will last for a period of 12 weeks from the 26th of March when the scheme became operational. The next question is, do you have to top up an employee's pay? And whilst there is no legal obligation to top up an employee's pay, both the legislation which brought in this scheme and indeed the revenue guidance refer to the employer making best efforts to try and maintain the employee's pay at the normal level pre-pandemic. So there is very much an encouragement to employers to try to top up the wage subsidy scheme. Can an employer deduct a pension contribution from a subsidy payment made under the temporary wage subsidy scheme? And the answer to that is no. The actual amount, the cash amount of the wage subsidy must be paid to the employee. The next one is, can you rehire someone in order to avail of the scheme where that person was previously laid off? And I think it's fair to say that from mid to late March, many employers were and are continuing to do so, but many employers had laid employees off, particularly in those sectors where there was total business closure and where remote working wasn't possible. The guidance makes clear that if you bring those employees back onto payroll, then in those circumstances, and depending on the employee's eligibility, of course, and your organisation's eligibility, the wage subsidy scheme will be available in respect of those individuals. The next question is whether you can make a position redundant and still avail of the wage subsidy scheme, and the answer to that is no. I think there tends to be a little bit of confusion between redundancy on the one hand and layoff on the other. Redundancy means the termination of the employment relationship, whereas layoff is of its very nature temporary in nature, and there is no termination of the employment relationship. I think it's probably better described as a suspension of the employment relationship. So the very essence of the wage subsidy scheme is the preservation of that link between employer and employee, and therefore if you make an employee's position redundant, you won't be able to avail of the wage subsidy scheme. The next question, one of the next questions which I have been asked is, do you have to notify an employee of the wage subsidy scheme and the fact that you're availing of it? And you must make this clear on the employee's pay slip. You must state very clearly the amount of the wage subsidy scheme which you are receiving in respect of the particular employee. The rates, when you read the legislation, you read the guidance, it brings me back to Leaving Cert Maths and accountancy, and they can be a little bit confusing when you read them, but as I said, there is a very helpful calculator available which does all of the work for you once you plug in the employee's average net weekly pay, which is calculated over January and February. There is, as I said, guidance available, and the guidance is very helpful. Now that guidance is being updated very frequently, and I just saw this morning before we came online that there has been a further update to the revenue guidance. So it is extremely important that you continue to keep abreast of changes and that you check for changes in relation to both the guidance and the revenues FAQ document. With regard to employees who are on sick leave and whether or not they qualified for the temporary wage subsidy scheme, if they're brought back on payroll, then yes, absolutely. And as I've said earlier, you don't have to, as an employer, top up the wage subsidy scheme, but you are strongly encouraged to do so. To move away from the temporary wage subsidy scheme for a moment and consider another very topical issue at the moment, and that is the issue of layoff and short time and the changes which have been made to employees' rights in those areas. So layoff occurs where an employee's employment is temporarily.
Sorry, Deirdre, sorry to interrupt again. We've lost your mic. Try again for me. Just try and
Can you hear me now?
We can indeed. Thank you.
Thank you. So layoff and short time. Layoff occurs in a situation where an employee's employment ceases temporarily, and where it's reasonable for the employer to consider that cessation of employment will be temporary, and where the employee notifies the employee to that effect. Short time is where the employee, because of a diminution in the work available, the employee works less than 50% of his or her normal working time, and where the employer reasonably believes that diminution in work will not be permanent and notifies the employee. And one of the questions I've been asked most in recent weeks has been whether or not there is a legal obligation to pay an employee on layoff or short time. And the first port of call in terms of answering that question is to consult with the employee's contract of employment. It's in some contracts of employment, there will be a specific contractual provision which allows you to lay off without pay or to place an employee on short time. If you don't have that express contractual provision, then you must consider whether or not you may have an implied right to do so. So you could have an implied right, for instance, because there's a custom and practice in your organisation of laying employees off, or indeed a custom and practice across the industry within which you operate. Now, if you don't have either an express or an implied contractual right to lay off or to place on short time, the next question I have been asked is, well, what are the risks arising from placing someone on layoff without any pay, or placing someone on short time and thereby reducing their payment? And in that scenario, an employee could bring one of two claims. The person could bring a claim under the Payment of Wages Act on the basis that there has been an unlawful deduction from her or his wages, or she or he could sue under the unfair dismissals legislation and claim constructive dismissal. I think given the Armageddon forecasts that we're receiving in relation to the Irish economy, it's probably unlikely that employees would resign and claim constructive dismissal. I think it's more likely that if they are going to litigate having been laid off or placed on short time, that they would do so under the Payment of Wages Act. And in that scenario, that claim would be heard by the Workplace Relations Commission, and the adjudication officer hearing the claim is empowered to award compensation as is reasonable in all of the circumstances. Now, what is reasonable in normal times vis-a-vis what's reasonable in the context of pandemic are probably two very different things. And I certainly think that employers or employees rather, might technically succeed in their claim under the Payment of Wages Act, but might be awarded a relatively modest level of compensation because of the highly exceptional circumstances in which employers currently find themselves. Now, that remains to be seen, and that's simply conjecture on my part. The next question relates to the change in the law. So before the emergency measures legislation came into force, if you placed me on layoff or put me on short time, I could, after a certain time period, claim a statutory redundancy payment. The emergency measures legislation which came in has suspended that right to claim a statutory redundancy payment, where the employee, because of COVID-19 and the measures the employer was required to take, has been placed on layoff or short time. There is a suspension of the right to claim a statutory redundancy payment. And then in terms of the state benefits that may be available to employees, they may either get the pandemic unemployment payment, or indeed may be eligible for the temporary wage subsidy scheme if, of course, the organisation is eligible. Other questions which have come up, and I suppose they're not specifically or peculiarly related to financial supports, but they are nonetheless, I think, noteworthy. One is, can you require employees to take annual leave? And under the working time legislation, when an employee takes annual leave, it is essentially a matter for the employer, subject to the employer taking into account the employee's need to reconcile work and family responsibilities and the employee's need for rest and recreation. There is also a requirement that the employer consult with the employee at least a month before the annual leave. Now, many businesses are collaborating and working with their employees in relation to alternative measures like annual leave, and agreeing that employees will take annual leave if the cash flow is there to cover the period of annual leave. The legal risks of implementing salary cuts, I'm aware that a lot of employers have implemented salary cuts. Obviously, you're not going to have a situation where you have a contractual right to do that. So it brings us back to the issue of what litigation might materialise in the future when the dust settles on the current situation that we're in. And where employees' pay has been cut unilaterally, then employees may bring a claim under the Payment of Wages Act. But again, I think we go back to what the level of compensation might be, and that is measured by what is reasonable in the circumstances. So that it remains to be seen whether or not employees might win their claims, but ultimately be awarded a small or relatively modest level of compensation, depending, of course, on the circumstances in which the employer was financially. The next point is around redundancies, and I've got asked a lot of questions about redundancies and what you need to consider in terms of implementing redundancies. The law in relation to redundancies has not changed. I think the introduction of the temporary wage subsidy scheme will be very relevant if employers now move to implement redundancies, in the sense that if you make my position redundant, assuming I'm not paid an ex gratia termination payment and I don't sign a compromise agreement waiving all my claims, I can bring a claim of unfair dismissal. And in the context of that claim, the relevant deciding authority would look at how reasonably the employer behaved in effecting the termination. So I think that it will be very important for any employer which is contemplating implementing redundancies to give consideration to the temporary wage subsidy scheme and to whether or not that temporary wage subsidy scheme could be available to the employer. Because I think it would only be reasonable for an employer to engage in that kind of analysis before implementing redundancies. Another very important point to consider if you are thinking about implementing redundancies, and this is not peculiar to the pandemic, if you're going to implement a number of redundancies, you need to be very careful that the numbers don't hit the numbers for collective redundancies. So collective redundancies are redundancies which hit a certain number within a consecutive 30-day period, and where the employer employs a certain number of employees. There are various thresholds. So you need to consider that question at the outset of any non-individual redundancy to ensure that you're not in a collective redundancy situation. Because if you are in a collective redundancy situation, there are very specific obligations prescribed by the relevant legislation, which is the Protection of Employment Act 1977, which require you, for example, to consult with employee representatives and to inform them of various things, and also to inform the minister. And there are significant and serious penalties of breaching that legislation. So that's an important one to bear in mind. And that isn't impacted by the current pandemic. That legislation continues to apply. So if the couple of other questions that I have been asked, if an employee is laid off, does he or she continue to accrue annual leave? And under the Working Time Act, generally speaking, save in cases where an employee is on sick leave, in order to accrue annual leave, you need to work. And there are various ways in which annual leave is calculated. So if you're not working, obviously you're not working during a period of layoff, therefore during that period of layoff, you won't continue to accrue annual leave. But by the time it comes to the end of the leave year, the period of layoff, depending of course on how long it was, may not have any material impact on your holiday entitlement. So the key point to take away there is that you won't accrue annual leave if you're laid off because you're not working and therefore you're not accruing. But if it comes to the end of the leave year, it may be that it won't have any impact on your number of days holidays. And the next one is
Deirdre, could I just pause you there? I am just very conscious of time, and I know these are commonly asked questions, and we have a number of questions from the floor. Would you mind if we put it to our panel now, a few of those questions and some from our floor, if that's all right?
Absolutely.
If I could ask all the panelists to come on camera and come on screen. And while they're doing that, Deirdre, would you be able to repeat where we can access the wage calculator? That was one of the times that your microphone cut out.
Oh, sorry about that. The wage calculator is on the Revenue's website. So
great.
There with the guidance and with the frequently asked questions, they're all there.
Another time that your mic went out was, can you answer, can employees be required to take annual leave again? But I think you got that.
I think the best, in very brief terms, the best way to approach that is to try and consult with the employee and come to an agreement around the taking of annual leave.
Right, thank you. Pauline, I have enabled your mic. You are first up if you would like to ask your question to the panel. Pauline, are you there? Try again. Yes, thank you.
Hello,
Go ahead. Hello, we can indeed. Thank you. Go ahead.
Perfect. Thank you very much. So my question is actually about loans. We are a small digital marketing influencer marketing agency in Ireland for the past 2 years with a very good turnover. But the effects of COVID-19 has impacted us in a certain ways. For example, certain brand dealerships, certain brand partnerships, were cancelled in March, and certain payments were deferred. Now everything is getting busy again, and we can see a lot of interest in influencer marketing these days. But we would like to apply for a loan to perhaps hire an additional staff, maybe 2 more, to actually deliver the assets of the campaigns. So we see that as business continuity and innovation. Also, certain partnerships are on the ambassadorship basis, which means we will be doing or delivering the work, but the payments will not be received until 2021. And that's why we're thinking about the cash flow loans. Now, we thank you very much to Feargal for his presentation about all the possible supports. We're just thinking what would be the best. We're looking for something in around 100,000 euros.
Okay, I'll maybe answer myself initially, and let other people come in. I think the loans, yes, there could be a fair case made for a loan, but I think you may also qualify for some grants to help you as well. So I suspect that it could be a combination of grant and loan, because some of your activity you're working up there would qualify in some of the eligible activities that the specific grants are targeting people to take, for example, digital marketing, online marketing, etc. So it may well be that you may not have to source it all via loan, but I would suggest that perhaps even the InterTradeIreland scheme may well be able to initially help you decide upon the best way to proceed with that, because it seems to me as if the activity you're referring to could well be a combination of grant and loan finance. But Patrick, maybe yourself or Aidan, if you want to come in on that.
Yeah, I think depending on your company size, Pauline, if you're less than 10 employees, and it sounds like you're in the category of internationally traded services, you could be eligible for a priming grant or a business expansion grant, which is up to 150,000 in grant support on eligible expenditure of 300,000. So 50% grant rate for perhaps bringing on new people, new business activity, and your local enterprise office will be able to work through what constitutes eligible expenditure. They also will be able to help you advise, and if you're a client of the local enterprise office, you can actually get a lower loan rate with Microfinance Ireland as well.
Right,
Well,
thank
I
you
hope that's helpful. I hope that's helpful. And what we're suggesting here is that obviously we'd have to get into more specific knowledge of the case, but certainly the case looks interesting enough, I would have thought, to go to your LEO or indeed the InterTradeIreland scheme initially to get assistance to advise you on the most appropriate way forward.
Great, thank you panel, thank you Pauline. Our next question is in from Jay Casson. Jay Casson, I have enabled your mic. Go ahead and ask your question.
Hi, my question is about redundancies. So we've kept our staff, we've 2 businesses, and we've kept our staff under the government wage support schemes. But our concern is that when we get to open, that the business won't be there to the extent that it was going into this. So while we're not laying people off during, we may well be in a position now, and also added to that, a big proportion of our staff are part-time, so, and they're used to flexible hours. So where does that leave us in terms of?
Yeah, that's a very good question and a very interesting one. Just going back, I suppose, to the objective of the wage subsidy scheme, and that is the preservation of that essential link between employer and employee. I would anticipate, and from what I'm hearing from clients, a lot of clients share, your perspective at present, which is that, extreme level of uncertainty as to what state the business is going to be in when the lockdown is over and when we try to return to some degree of normality. So you're absolutely right. At that point, there could very well be a redundancy situation. But I think that if you've gone through the self-declaration process and you're happy that you meet the eligibility criteria for the wage subsidy scheme, and the employees are eligible to participate in the scheme, I think that the possibility that you may at some point in the future have to implement redundancies, that doesn't stop you applying for the wage subsidy scheme and participating in it so long as you're eligible. But you're right, I mean, when you come back to, when the wage subsidy scheme stops, I mean, it may be that at that point you have to consider the implementation of redundancies and all of that, all that entails.
I hope that answers your question.
Yeah, thanks.
Great, thank you. We have time for 2 more questions. We are going to go to one from the floor who does not have mic capabilities. So this is a question for, I believe, Aidan. Aidan, we don't have an EI advisor. We are self-funded and have a major project underway that involves R&D and innovation with major infrastructure. We've had to put things on hold because we can't travel to Spain where the scientific equipment is. Because of the extent of our own investment, we're not attracted by equity investment. How might EI help us? Note our business is in Ireland, it's just the equipment is in Spain.
Yeah, I think first of all, I suppose one of the things that we need to see is what's the specific ask, what's the funding requirement. If you have that already outlined, there's 2 things that you can do. You can get financial support through our COVID-19 financial planning assistance support, and that allows consultancies, that allows you to put together a financial plan that can either come into Enterprise Ireland or actually can go into an SBCI pillar bank, which would outline what your funding requirement is, what your cash requirement is, and would make that whole application process a lot easier. So I think that's the one thing I would encourage you to do, is to apply for that financial planning grant. To qualify for that, you contact our business response email address or team. We set up a hub to take inquiries from non-client companies that may be eligible. Or you probably qualify for that, as in that you are, I guess, focused on R&D, innovation, and are internationally traded as well. So I think there's lots of scope to support you. So I would really, I'm just conscious of time, really direct you into that business response email address on our website. We have a hub there that would direct you to the most appropriate people to help you with it.
Great, thank you.
Caroline, could I just suggest before you go to the last question, in case that I missed out some key points that Aidan wanted to cover from an Enterprise Ireland perspective, that Aidan feels free to come in and say those just before we go to the final question. Would that be okay, Aidan? If there's anything you want to add?
Yeah, no, I appreciate that, Feargal. I think overall this presentation has been very useful. I think the key message that I'd like to remind participants on the call is, and I kind of bore out in the poll that was taken earlier, is that in the first protocol, I would ask people to take up whatever funding supports are available to help prepare a financial plan for the next 6 to 12 months. Both the local enterprise office have a business continuity voucher for €2,500, which is 100% funding to work with a financial advisor to put that plan in place. Enterprise Ireland clients are companies that have 10 or more employees that are manufacturing and internationally traded services. They can access the 5,000 COVID-19 financial plan support that again allows you to work with an expert to put in a robust financial plan and sustain an enterprise plan, that we call it, that can either come into Enterprise Ireland for support, could go into a pillar bank or a Microfinance Ireland, and it takes a lot of the pressure off yourself in preparing such plans as well. We have quick turnaround on that, and indeed of all our supports, we're trying to turn around our application process to under 20 days in a lot of cases. That's the thing. If you have a strong financial in-house expertise and you're confident that you can produce a plan and you have a clear plan in putting an application into Enterprise Ireland, don't hesitate to contact our business response hub, and they will assign you a development advisor. Even though you may not have had one before, we will work with you to understanding what your capital requirements, your cash flow requirements are for the next number of months. This scheme is open between now and the end of the year. We've allocated 180 million to it. However, that may change. And indeed, we're very keen to hear if companies are struggling to access pillar bank finance, that we want to work with you to ensure that you can get some repayable finance. The one thing I would mention as well, Feargal, we call it a repayable aid or repayable grant. So that allows it to sit on the balance sheet, not as a loan, but as a repayable. It's a small technicality, but we hope it would allow companies to leverage other market capital as well.
Great, thank you very much. Our final question today is from Drummond House. I have enabled your mic. Do you want to come and ask our panel?
Thanks, Caroline. Marita here from Drummond House Garlic. Obviously, my business is primary growing of garlic and asparagus. So I have 3 full-time staff, which when our season is finished, automatically get laid off for the season. I re-employ then when our new season starts, which is actually now. The asparagus is growing in the field, but obviously my food service industry, my restaurant trade, is 0. So we're about to launch the online store, and I have massive inquiries, thankfully, in from producer or from stores and from the public who want to buy it. My problem is obviously cash flow to get the staff, re-employ them because they go through the books. Is there any, they weren't working in March for COVID-19, so they weren't on the books. To re-employ them, is there any incentives to kind of say, look, you know, they're seasonal workers, you're going to be putting them on the books, you're paying a stamp for them. To re-employ them, we can enable you with some funding or subsidy schemes. Is there anything available for like seasonal workers in a business like me, so that I can get them back working and get sales in and keep them?
Caroline, I think we've got the gist of the question. The question, if I interpret correctly, I know the sound is going a bit back, but the question, if I interpret correctly, is this lady obviously is a good brand, employing 3 people, involved in online, wants to develop more her online stuff, bringing back in seasonal workers, and wants to know, can she get grant assistance or other forms of assistance to help her take on those seasonal workers? First of all, maybe, Deirdre, if we, in terms of the COVID-19, the wage subsidy scheme, can she benefit from those can she benefit from that at present if she takes them on again as employees?
If they weren't on payroll on the 29th of February, and it seems from the question that the individuals weren't actually employed then on that.
So that's the key answer to that first question. Were they on payroll by the 29th of February? If they weren't, then not eligible really for the wage subsidy scheme. Then the next point, I think, is, and other panelists feel free to come in, but I'll try and deal with it. The next point is that the activity you're referring to, it may not necessarily be that you get a grant for the individual employees, but you may well get a grant towards developing the activity you're now talking about. So I would suggest that given the scale of your operation, you either approach your LEO, as Aidan has said, or also indeed the InterTradeIreland, given the activity you appear to be trying to develop. I would think that there is advice out there to help you. And I'd hope maybe a little bit of assistance. It may not well be.
Hi, Kieran, how are you?
So is that of help to you?
And
unfortunately, her mic has cancelled out there, Feargal, but hopefully that will have answered her question.
I suggest there was an issue there. If she emails us or emails InterTradeIreland, we'll pick it up and direct her to who we consider to be the appropriate people. But I believe there is potential help available.
There are still a few more questions coming in. Do we have time, or should we get in contact with them outside on a one-to-one basis?
Well, that's Shane advising that one.
Well, if our panelists are happy to answer the last couple of questions, I would be keen that we do that.
Okay, Siobhan, I have enabled your mic. Would you like to come in and ask your questions to the panel?
Hi guys, I'm just wondering, we have an IT company and we have 10 staff in the office, and we are thinking of going back on a part-time remote basis so that everybody can work from home and hot desk in the office. And I was wondering, are there any schemes available that will help us become health and safety, comply with health and safety regulations for people who are working at home to set up their workstations?
Yeah, that's a really good question, and one that's coming up quite a lot. I'm just conscious of time. The whole area of health and safety is that there's a huge amount of detail. So there are very many obligations imposed on employers under the primary legislation, and then under a number of implementing regulations. There's no scheme in place as such. In terms of practical guidance, I would suggest that, and they deal with a myriad of issues, but the Health and Safety Authority's own website, and it is being updated frequently, has some very useful practical guidance for employers. And then I think you're also, going to have to look at the HSE ongoing updates and so on in terms of public health guidance. But the starting point, I think, would be the Health and Safety Authority's own website, because they do summarise in quite a user-friendly format what the key obligations are in terms of ensuring, that people are safe whilst they're not working in work as such in the office.
And Michael, perhaps you come in there briefly about some of the changes that are being proposed, technically speaking, could open the door in terms of she's trying to innovate new methods of delivering to our customer by varying her methods of processing within the office.
Sorry, yes, sorry. What I would say to you, Siobhan, is, and going back to something Aidan raised earlier, is either your first port of contact, I think, should be either the LEO or Enterprise Ireland or InterTradeIreland, and avail of the financial subsidy grant that's there in order whether the entities, the funding entities on the island, or indeed the various banks and the loan schemes. I think there is, I think there will be opportunities, and I'd be interested to hear Aidan's comments on it. I think for the ability to allow some of the grants to be used to fund remote working and different ways of people working and operating going forward. And remote working is one of the areas I think is definitely something that I think find the government agencies are going to support. In terms of the SBCI loan schemes, and also the microtrade loan schemes, I think they would also be available in order to come up with a a funding package that would allow you to bring that opportunity back into reality and delivered. So I would say the areas I would encourage you to go to one of the agencies, InterTradeIreland, the LEOs, or Enterprise Ireland, depending on where your business fits, and seek the financial support that's there, prepare a plan, and then assess the various options around grant and funding in order to make that happen.
Yeah, and let me in, just before you come back in, I think the key point Aidan was making earlier on, Siobhan, which is really relevant here. Really what you're saying is part of a business continuity project plan. And to do it justice, the best way to do that is not to look at it in pure isolation, but to integrate it in an overall business continuity roadmap forward. And that's where Aidan was trying to encourage businesses like yourselves to go and get a little bit of assistance to help you formulate in a way that will be familiar to both grant agencies and banks, etc., what your case is and why it deserves support, and why, if you get that support, you will have a viable and growth business going forward. But Aidan, if you want to maybe...
Yeah, no, Feargal, I think that's good advice. And just to re-emphasize that whether you're a local enterprise office client with 10 or less, or 10 or more as an Enterprise Ireland client, we have similar supports, and the supports are kind of mirror each other. And in our case, in Enterprise Ireland, we have the Lean Business Continuity Voucher, which essentially is €2,500 to allow you to do exactly what you suggest you need to do, is put the measures needed in place that your team can operate safely and provide the services that they're doing. So that support is there. The Leo has something similar. Indeed, to put that plan in place, both ourselves and InterTradeIreland have supports to access consultants that can give best advice around developing that plan. And ultimately, I would even go a step further to look beyond our own agencies and look at some of them. There's some very good online courses being developed now around managing teams in remote environments. There's courses being developed as we speak to help manufacturers in the new potential trading and operating environments. So there's going to be a slew of supports, both from a training perspective and also from a cost saving perspective, to help your business get back on track and deal with some of the new measures that are likely to be implemented as well.
Thank you.
Thank you, Siobhan, and thank you, panelists. I am going to close questions there. Don't worry, if you have put a question in, I will get you in touch with the correct expert to answer your question directly. But I would like to thank you for your time today, both to our speakers and also to those who were with us. A lot to take away and a lot to mull over. Please, as I've said before, the recording will be up on InterTradeIreland's website. So if you have missed anything or you'd like to share it with anyone, please go there and they will be up there shortly. Please don't forget that this is only the first part one of our 3-part series. We will be back next Thursday and Friday for cash flow management and funding, and the week after that, Thursday and Friday, for planning for recovery. All the details, along with registration, which is now open, can be found on InterTradeIreland's website. So all that is remaining to say is thank you for joining us and stay safe.